right, welcome to Talking Investing. I'm Tom, and as always, this is not financial advice. Today, I have a very different video for you guys. I want to talk about the Bitcoin miners. A lot of the Bitcoin miners have been reporting their quarterly results over the last several days. So I've spent the last 2 or 3 days going through conference call after conference call and digging through financial statements. I will tell you, it's an overwhelming amount because they all reported basically at the same time. So having gone through my first look at these financial statements, there's several things that jumped out at me. So what I'd like to do is talk about those things, and I want to describe what I think the Bitcoin miner of the future needs to look like going into the halving. This industry has changed dramatically, and I think there's a bunch of fundamental core things that these Bitcoin miners are going to need to do and switch gears. Some of them are already doing that. Some of them have already done this, but I'm going to go through kind of a bullet point list of the things that I think a successful Bitcoin mining company is going to look like going into the halving and coming out of the halving. And I think the companies that do these things are going to be highly successful. I think the companies that don't do these things are not going to be worthy investments. A lot of the fundamentals on how to conduct business have changed. This industry has matured in the last 18 months through this crypto winter, and I think that some things have changed and they're never going back. I will later in the video talk about the price of Bitcoin as well, because really this is all contingent on the price of Bitcoin. If Bitcoin doesn't hit certain prices at certain times, then all of these investments are going to struggle, and it may take a lot longer to get where we're going. Okay, so the number one takeaway I had, and I don't necessarily want to rank these, but the first thing that jumped off the page at me, it is clear that debt is dead to the Bitcoin miners. I do not believe that any Bitcoin miner will ever have debt again. I don't think that the use of debt is compatible with this industry. So a lot of companies did go out and get a lot of debt as Bitcoin was on a run, on a huge bull run. It was just get as many machines at all costs, at any cost, through dilution, through debt, whatever it takes. So I don't think that's ever going to happen again. Things have scaled up to a point where that is just not a sustainable formula. And the way that these halvings work, because they're going to keep coming every 4 years, I just think that debt is not compatible with this industry. Now, I will differentiate. I'm talking about debt to buy Bitcoin mining machines because these have a shorter shelf life. So, debt that companies take on to build out infrastructure, if that infrastructure is going to last them 10 years or 20 years, that would be different. So, that type of debt may still exist, but the concept of going out and leveraging against your Bitcoin or against your Bitcoin miners to go buy Bitcoin mining machines, I do not believe there will ever be another debt deal in that regard. So as I look through these financial statements, I'm looking at the companies that a lot of them are already at zero debt, many of them. Some of them still have remaining debt, but looks like they're going to get to zero before the halving. And then there's others that are stuck with some debt. So they've done some renegotiating of that debt, but that's one of the key pieces that I'm going to look for. These companies need to find a way to reduce their debt as much as possible prior to the halving. I will also differentiate. I'm just going to talk about Marathon for a second. They have over $700 million in debt. They have by far the most debt out of everybody other than Core Scientific, which has already filed Chapter 11. However, their debt is convertible debt. It's not due for years, and it's at 1%. So that is a separate conversation. So if there's any debt ever going forward again, I think it will be more structured like that. But effectively, that is equity in a lot of ways. Number two, I think the number one goal of these companies going forward is going to be maximizing gross profit dollars. People were buying machines with delivery dates out 6 months or a year, having to give gigantic deposits, paying any price that they could to get machines. That seemed like it was going to be the bottleneck. Well, that has changed drastically. I don't think machines will ever be the bottleneck again. Then the focus kind of shifted to mine as many Bitcoin as we can. Well, as time went on, that model no longer really worked because we went into a crypto winter. So all of a sudden, there was a gigantic reversal to curtail. We've got to save energy. We've got to save cash flow. We need to survive. Then it became survival mode. 1 month at a time. How do we survive the crypto winter? Most companies stopped their growth, and a lot of these companies significantly reduced the number of Bitcoin that they mined. Now, I think we're a little more mature, and I think this is going to be true going forward. What these companies need is the maximum number of gross profit dollars. So I say dollars, not percent. I don't believe that gross profit percent is the indicator that people should be looking at. They need to generate gross profit. So as many dollars of gross profit as they can through managing efficient mining. The technology on mining and managing energy is going to be core to the success because they do need to strike that balance. And a lot of these are now doing this in real time, finding a way to make sure they're minimizing their costs and maximizing their output. So that's a big fundamental change. And we've seen, if you listen to a lot of these conference calls and you look at a lot of these updates, companies are increasing the amount of technology and resources around that. They're changing their business model, which is why, one of the things we compare and rank each month is who mined the most Bitcoin. Well, that still always will be something that we look at for sure. Who has the most exahash, who mined the most Bitcoin, but who's the most efficient and who has the most gross profit? So there may be companies that mine significantly less Bitcoin, but because they controlled their costs, they have more actual gross profit dollars. Well, that is more important by far than the number of Bitcoin you mine. The next thing in the same vein is they're going to have to control their overhead. Some of these companies have big overhead numbers versus their revenue and versus their gross profit. So I think you're going to see as the halving gets nearer, and particularly after the halving, I think you're going to see all these companies take a different approach to overhead, and they are going to really get as lean as they possibly can. So a lot of companies still are trying to reach a certain target exahash, but I do think it's going to shift, and they're going to try and get to that exahash and then scale back their overhead to a level where their overhead to gross profit ratio improves. Managing cash flow is all about your direct cash costs and your overhead cash costs. Your gross profit minus those two things is your net cash flow, which leads me to the next thing. These companies need to be cash flow positive immediately. So this is one that should not take time over time. They need to be cash flow positive now. That is a bare minimum requirement. Companies may hit this at different times. And one of the things a few of these companies are saddled with is they did buy machines at gigantic numbers. So there's going to be a big difference for a lot of these companies between their GAAP net income versus their EBITDA, and that is because of the massive amount of money they paid for the machines. Now, those costs are already sunk and spent, so there's no point in belaboring them. The cash is already gone. So going forward, that's not affecting their cash flow. They need to utilize these machines, but it will be a big difference. Some of these companies are going to have gigantic depreciation numbers, and that is going to eat away at their profitability. So we're going to have to look at EBITDA versus profitability, and we're going to have to see how the market reacts to that. So step 1, cash flow positive. Step 2, EBITDA positive. Step 3, GAAP profitability. All of those things need to be strived towards, and it may take some of these companies longer than others, depending on what they've already paid for their machines. I do think we've now gone to a model where almost all of the Bitcoin miners now pay for their operations from the Bitcoin that they mined that month. So I think the situation of hodling 100% and diluting shareholders is gone. Those days are over. I do think there will be a particular emphasis from now until the halving, which is about 1 year away. I think a lot of these companies are going to try to get as many Bitcoin on their balance sheet as they possibly can, because this is their last best chance to mine Bitcoin at a low cost. Because remember, the halving is going to have the reward, so that significantly changes the cost per coin. Also, these companies will continue to dilute to some extent. I think we're going to see that decrease, but a lot of these companies are still using heavy dilution to get to where they're going. By the halving, I think the companies that have reached 6 exahash or greater are going to be the ones that stay in the relevant conversation going forward. The rest, I think, are going to be considered small cap or nano cap stocks, and there may be trading opportunities in those, but it's going to be very hard for them to thrive on a long-term basis if they're at 1 or 2 exahash by the time the halving comes by. Another thing I think it's going to be critical for these companies to do is to extend the life of their existing machines as long as they possibly can. We do know as this goes, there will be the next generation of Bitcoin miners. So the companies that have more of the XPs, which tend to be the most efficient miners on the market right now, or XP equivalents, those machines, they need to find a way to stretch those out and continue to have profitability beyond the 2 or 3 years that they spend depreciating them. If they can stretch those out to 4 or 5 years of profitability, then those extra years past where they're already 100% depreciated, that's where these companies can start to really generate profitability and net income. Also, it's obvious at this point that as technology increases and each halving occurs about every 4 years, all of these companies are going to have to make significant investments in new Bitcoin miners. So being strategic about that, we cannot have another round where all of a sudden all bets are off and people are just buying machines at all costs. All of the machines bought from this day forward need to be planned out thoughtfully, on how they're going to pay for them and how much they're going to pay for them and when they need them. So those are going to be key components. The economics on this have changed, and I just don't think they're ever going to change back. There's more and more competition. The Bitcoin global network hash rate is at an all-time high and continues to grow. It has more than doubled, so even before the halving, effectively, we've already had a halving by the total exahash doubling. So, that may level off at some point in the future, but, I think we can expect it to stay at these higher levels if Bitcoin stays healthy. So that's the last thing I'll talk about. I want to talk price point for Bitcoin. It's my very strong opinion that Bitcoin has to hit a new all-time high at or around the halving. Now, whether that's 2 months before or 2 or 3 months after, somewhere in that window of time, if Bitcoin has not hit a new all-time high, I'm not saying it needs to hit 100,000 or go to the moon, but if it hasn't taken out that 69,000 and got somewhere in that 70,000 plus range by the halving, I think these companies are going to struggle, and it's going to take a lot longer for them to get where they're going. Then obviously long term, over the next 5 to 10 years, I do expect Bitcoin to be significantly higher than that. I'm not even looking necessarily for Bitcoin $1 million like Kathy Wood and a lot of other people have called for, but we do need to get into that between $150,000 and $300,000 range in a 5-year window of time, in my opinion, for these companies to get where we hope they're going. For these companies to 3x and 5x or 10x or more than that. I think that's the trajectory that Bitcoin has to take. So I'm going to be monitoring this list of items that I just talked about. So the companies that stick to this type of a plan, in my opinion, will be the ones that succeed over time. Hopefully these bring up some thoughts as you're doing your due diligence to try and analyze where we go going forward in the Bitcoin mining sector. So if you made it this far, thanks so much for watching. Please remember to subscribe to the channel, smash the like button, and hit the notification bell so you never miss a video. Thanks again, and we'll see you in the next video.